if 5% of all of the people in the world with more than $1 million in net worth, I think that's roughly it, were to take out an insurance policy and try assuming that there's a 5% chance their wealth will be confiscated. If they put 5%, that would be $1 trillion opportunity for Bitcoin just there today, present valuing it to today. We also took a look at demonetization. So again, that can happen in a number of ways. It can happen because of hyperinflation and currencies becoming worthless as corrupt regimes basically lose control. And so I think that opportunity, he characterized it using monetary measures from emerging markets or markets other than the developed world. That was another $1 trillion opportunity. And I'm blanking on the third one, but those two use cases alone, $2 trillion, we're starting from, and that's present valuing them, right? This is going to scale with time from 200-ish billion right now for Bitcoin. Those two alone, we think, are going to be the most important use cases. Now, one of the refinements of our thinking about Bitcoin is the first paper we wrote, Chris wrote in collaboration with Art Laffer, basically was titled something like, could Bitcoin serve as the three roles of money? So means of exchange, store of value, unit of account. And I think we've morphed our view a bit, and out of recognition that the means of exchange role for Bitcoin is really on its network, on the Bitcoin blockchain, on the base layer, is for very high value transfers, right? Anything small, like a cup of coffee or a pizza or however you, no, too expensive, takes too long. It's not set up for that. Lightning Network is making progress. That's interesting. What's also interesting though, and raises a lot of questions that come up at our brainstorm, is the fact that Bitcoin is, the transactions in Bitcoin are more on the Ethereum network, or larger, than on the Bitcoin network, is really interesting. That's really interesting. Now, store of value, we believe that's the case, mathematically metered. Unit of account, still, most of the crypto world is quoted in terms of Bitcoin. But means of exchange, what does this mean that more is trading? Is it truly that Bitcoin is the reserve currency? We do believe it is. And this is another manifestation of it, that transaction activity taking place on Ethereum is higher than on the Bitcoin blockchain itself. And does this mean that the velocity of Ethereum or of Ether is going to speed up if Bitcoin is fulfilling some of the transaction roles? Maybe. So we're going back and forth on that, because this concept, as you know from Chris's original work, this concept of velocity increasing or decreasing is a very important one to figure out who's going to be left standing in terms of cryptocurrencies. We think it's only 3 or 4 potentially, and we're specifically interested in, ARC is, in cryptocurrencies, because we do think it's going to be winner take most. It's like a lot of our other innovation platforms, the most secure network or the most robust network, the first one there gets the lion's share of the market. But there has been this refinement of our thinking in terms of means of exchange. What the biggest surprise to me in doing the research we've been doing and sharing is that when we engage with innovators, let's say, and they may have VC owners, the venture capitalists are not doing the kind of research we're doing, this first principles based, I mean, when you think about it, our autonomous vehicle, autonomous truck, drone models, they started in 2014, 2015, and they are evolving. We're going, as the technology progresses and the costs drop, our models are becoming even more useful to us. And why is that? Because the venture capital world, they will only go so far, and then they want a liquidity event. The world we're looking at, and we call ourselves the closest you'll find to a venture capital firm in the public equity markets, we believe that these opportunities, the platforms, the technologies, are the seeds for all of them were planted in the tech and telecom bubble. We weren't ready for prime time back then, and it ended badly back then. But 15 to 20 years of gestation of these new technologies, they are ready for prime time now. It's interesting that many people are nervous about the volatility now that they're ready to take off, but they didn't mind the volatility during the tech and telecom bubble.